Mr. Stag here. Warren Buffett isn't just a name, he's a living legend in the world of investing. From humble beginnings in Omaha, Nebraska, he became the Oracle of Omaha by understanding a principle that many investors still struggle with. It's not about short-term trends, it's about long-term value. Buffett built Berkshire Hathaway into one of the most powerful holding companies in history, amassing a fortune that rivals entire countries. His philosophy is deceptively simple. Invest in businesses you understand, look for durable competitive advantages, and hold them for decades. But behind this simplicity lies decades of insight, intuition, and relentless discipline. Every decision, from buying insurance companies for their cash float to acquiring a stake in Coca-Cola, tells a story of patience and strategic thinking. Berkshire Hathaway's portfolio today reads like a who's who of American business, spanning technology, banking, energy, consumer goods, and niche service providers. In this video, we'll explore Berkshire Hathaway's top 10 holdings by value, starting from the smallest to the largest. We'll reveal why Buffett invested in these companies, how they fit into his overarching philosophy, and what lessons every investor can take from the Oracle himself. This is more than a list of stocks. It's a masterclass in building wealth the Buffett way. Number 10, DaVita, the niche health player. Occupying the 10th spot in terms of value is DaVita, representing 1.79% of Berkshire's portfolio, with 32.16 million shares worth roughly $4.6 billion. Buffett's interest in DaVita stems from its specialized role in providing dialysis services in the US and internationally. While not the largest holding, it exemplifies Buffett's affinity for companies with consistent revenue streams and an essential service. Over time, DaVita has delivered steady cash flows, though it hasn't had the explosive growth of larger holdings, making it a defensive but meaningful piece of the Berkshire puzzle. Number 9. Chubb Limited, Insurance Excellence. Next up, Chubb holds 3.04% of the portfolio, with 27.03 million shares valued at $7.83 billion. Insurance is a cornerstone of Berkshire Hathaway's empire, and Chubb exemplifies disciplined underwriting, conservative risk management, and stable profits. Buffett has repeatedly emphasized the importance of insurance as a source of float, cash that can be reinvested to fund other investments. Chubb not only earns returns on its policies, but also provides Buffett with a reliable mechanism to deploy capital across the broader market. Number 8. Kraft Heinz, the iconic consumer brand. Kraft Heinz comes in at 3.26% of Berkshire's portfolio, with 325.63 million shares valued at $8.41 billion. This investment has been more volatile, with a notable decline from previous peaks. Yet Buffett maintains confidence in the long-term potential of recognizable food brands that dominate supermarket shelves. He has acknowledged that mistakes happen in investing, but sees value in holding iconic companies through short-term turbulence, trusting that brand strength and eventual operational improvements will pay off. Number 7. Occidental Petroleum, Energy Opportunism. Occidental Petroleum represents 4.32% of the portfolio, with 264.94 million shares valued at $11 to $13 billion. Buffett's strategy here is opportunistic, acquiring energy assets when market prices undervalue them relative to intrinsic worth. Occidental brings tangible assets, cash flow potential, and dividends into the mix. While energy can be cyclical, Buffett's long-term focus allows him to ride fluctuations, concentrating on durable value rather than short-term market noise. Number 6. Moody's, the credit rating powerhouse. Moody's takes 4.81% of the portfolio, with 24.67 million shares worth $12.37 billion. Buffett admires companies with pricing power and enduring competitive advantages, and Moody's fits this philosophy perfectly. Dominating the credit rating space, Moody's benefits from regulatory barriers, global financial reliance, and recurring revenue. Since Buffett's initial investment, the stock has seen astonishing gains, exceeding 770%, demonstrating how owning a niche monopoly can compound wealth over decades. Number 5. Chevron, diversifying with energy. Chevron makes up 6.79% of Berkshire's holdings, with 122.06 million shares valued at $17.48 billion. Buffett's rationale here combines cash flow reliability, dividend yield, and a hedge against market volatility in tech or finance sectors. Chevron exemplifies Buffett's principle of investing in companies with tangible assets and predictable earnings. By holding energy alongside consumer, financial, and tech positions, Berkshire ensures a diversified, resilient portfolio. Number 4. Coca-Cola, the classic dividend, king. Coca-Cola represents 10.99% of the portfolio, with 400 million shares valued at $28.3 billion. Buffett's long-term love affair with Coke began in 1988, when he saw an opportunity that went beyond simple beverage sales. At the time, Coca-Cola was already a global household name, but Buffett recognized something many investors overlooked. The brand itself was a durable competitive advantage, almost a monopoly in the minds of consumers. He famously said, "I drink Coke every day. I know it's a good product. I'm investing in what I know." This wasn't a casual endorsement. It was a reflection of Buffett's fundamental principle. Invest in companies you understand, that have predictable cash flows, and whose products people will continue to demand for generations. Coca-Cola's distribution network was another key factor. From bustling cities to remote villages, Coke had perfected global logistics, ensuring its bottles reached nearly every corner of the world. Every single day, over 1.9 billion servings of Coca-Cola beverages are consumed, illustrating the sheer scale and consistency of the company's cash generation. Beyond the numbers, Buffett admired Coca-Cola's ability to stay relevant through marketing and innovation. Campaigns like Share a Coke and sponsorships of major sports events kept the brand culturally significant, while new product lines, Diet Coke, Coke Zero, and flavored variants, allowed the company to adapt to changing consumer tastes without diluting its core brand. This combination of enduring popularity, massive global reach, and a reliable dividend made Coca-Cola a cornerstone of Buffett's portfolio, providing not just capital appreciation, but an ever-growing income stream. Number 3, Bank of America, contrarian value investing. Bank of America accounts for 11–12% of Berkshire's holdings, with 605.27 million shares valued at $28.64 billion. Buffett purchased both A stock during the 2008 financial crisis, combining discounted equity with preferred shares paying a 6% dividend. This contrarian move exemplifies Buffett's ability to act when others panic. Today, the bank contributes substantially to Berkshire's overall earnings, demonstrating how calculated risks during periods of fear can result in outsized long-term returns. Number 2, American Express, the timeless financial brand. American Express holds 18–78% of the portfolio, with 151.61 million shares worth $48.36 billion. Buffett's investment history with Amex stretches back decades to the 1960s, when he recognized a temporary scandal as an opportunity to acquire a company with unparalleled brand loyalty and customer trust. Today, the holding has grown more than 365%, reflecting Buffett's principle of investing in companies with durable competitive advantages and predictable cash flows. Number 1, Apple Inc., the crown jewel. Apple sits at the pinnacle of Berkshire's holdings, representing 22–31% of the portfolio, with 280 million shares valued at $57.45 billion. Buffett's foray into technology surprised many. Historically, he avoided tech stocks, citing the difficulty in predicting the longevity of competitive advantages in the sector. Yet Apple was different. It was more than a tech company. It was a lifestyle ecosystem, with products and services interwoven into millions of consumers' daily lives. Buffett saw Apple's durable competitive advantages everywhere: brand loyalty, a seamless ecosystem, and a culture of innovation. The iPhone, iPad, Mac computers, Apple Watch, and AirPods all lock consumers into the ecosystem, creating recurring revenue streams through both hardware sales and services like iCloud, Apple Music, and the App Store. This predictability, combined with incredible pricing power, made Apple resemble the kind of consumer-focused company Buffett had always favored, like Coca-Cola. The numbers tell part of the story, but the narrative of consumer obsession, design excellence, and global reach completes it. Since Buffett's initial purchase in 2016, Apple has delivered gains exceeding 480%, and it continues to pay dividends that feed Berkshire's cash flow. More than just a stock, Apple represents the future of consumer business in the 21st century, a rare combination of technology, branding, and finance that even Buffett, the Oracle of Omaha, could confidently embrace. Apple also reflects Buffett's adaptability. While he may have once avoided tech, his investment in Apple shows that a disciplined approach, focusing on durable brands, consumer loyalty, and strong margins, can be applied even in rapidly evolving industries. It's a testament to the universality of his principles. Understand the business, trust in its long-term potential, and let compounding do its work. And there you have the full spectrum of Berkshire Hathaway's top 10 holdings, from the smallest to the crown jewel, Apple. These positions tell a story far beyond numbers. They reflect Warren Buffett's discipline, insight, and patience. From a niche healthcare provider to one of the world's most recognizable tech companies, each investment demonstrates a philosophy rooted in understanding businesses, waiting for the right opportunities, and holding with confidence. Buffett didn't just buy stocks. He built a legacy of wealth, strategy, and lessons for every investor. His portfolio teaches us that success is rarely about timing the market, but about time in the market. Each of these holdings has weathered recessions, crises, and volatility, yet they continue to deliver value, dividends, and growth year after year. For aspiring investors, Berkshire Hathaway is more than a company. It's a masterclass in thinking like the Oracle of Omaha. And for the rest of us, it's a story of extraordinary patience, discipline, and compounding that has created one of the richest men in history. Thanks for watching. If you enjoyed this deep dive into Buffett's empire, be sure to like, comment, and subscribe to Stag Research, your go-to channel for founder legacies, investment strategies, and the untold stories behind the world's most successful companies. Which of these holdings would you buy if you had Buffett's capital? Would you stick to Apple and Coke or explore the lesser-known gems? Drop your thoughts below. Mr. Stag, logging off.